For 40 years, the memory chip business was priced by Wall Street the way tomatoes are priced in a wholesale market: volatile, cyclical, boom, then bust, then boom again. Nobody serious paid a premium for it because the next glut was always 6 quarters away. Yesterday, a single analyst note from UBS broke that 40-year frame. Micron Technology, ticker MU, closed up 19%. It crossed $1 trillion in total market capitalization for the first time in history. And the question I want to sit with this morning is not really whether the rally is right. The question is, what just happened to your assumptions about the entire computer industry while you were sleeping? Welcome to Invest AI Savvy, where AI powers smart investing. Welcome to Wednesday, May 27th, 2026. Quick housekeeping before we go any further. This show is for educational purposes only, and it's not investment advice. BuzzPulse is a research platform. I'm not your financial advisor, so please do your own due diligence. And now let me see your tickets to this YouTube show because it's going to be a doozy. Here's the setup for the day. The Standard & Poor 500 and NASDAQ Composite both closed at all-time intraday and all-time closing highs yesterday. The Dow lost about 118 points, so the picture is not unanimous, but the tape is in a very specific mood. That mood has two ingredients. The first ingredient is the U.S. and Iran peace talks. Secretary of State Marco Rubio said publicly yesterday that a deal could be just a few days away. President Trump posted that talks are proceeding nicely. Brent crude was up about 3% on Strait of Hormuz uncertainty, but futures shrugged that off because the market has decided to lean toward de-escalation than escalation. Ingredient number two is the Micron move, and we're going to come back to that in a second. Overnight, BuzzPulse flagged the semiconductor ETF, ticker SOXX, with a Z-score of 7.3. 5 convergence layers fired. And the broader Philadelphia Semiconductor Index confirmed, closing in 7 of the last 8 weeks up. Marvell Technology has logged 10 straight weekly gains. The system is reading this as a real sector trade, not a one-name spike. But here's the deal. The system promoted SOXX as the best available signal, not a fully clean signal. The convergence depth is 5, not 9. And there is a contrarian wrinkle the system flagged that I want you to know about because I would rather you hear it from me. Michael Burry, the same Michael Burry who shorted the housing market in 2007, has an active short position on SOXX. On paper, the system is making the case for the semiconductor sector. Whether that case holds against the famous short call is what we're going to find out together. Not sure if I trust the convergence math here more than I trust Michael Burry. Today, Micron is the highest score on the board this morning, and I want to walk you through what that number means. Engagements on Micron is in the last 24 hours hit 36.9 million. That's an all-time record for the stock. Mentions are up 301% above the daily average. 5,500 unique creators posted about Micron yesterday. The social activity is not just elevated, it's unprecedented in the recorded history of this data set. I want to take a step back and explain why that UBS note actually mattered, because the move yesterday was not really about a price target. It was about a reclassification. For decades, memory chip companies traded at low multiples, low single digits in the bad years, low double digits in the good years. The reason was structural. Memory was a commodity. Customers played suppliers off against each other, prices crashed every 2 or 3 years, and earnings were impossible to forecast. UBS yesterday raised their price target on Micron from $535 to $1,625. That's a 204% hike, the biggest single note revision in recent semiconductor analyst history. And the reasoning was not that memory got better. The reasoning was that the hyperscalers, the Microsofts and Googles and Amazons of the world, are signing long-term supply agreements with Micron that lock in volume and pricing across the AI build-out. The cyclical business is becoming a contracted revenue business. UBS said in writing, there is no reason Micron should trade at a different multiple from NVIDIA. Read that one more time. No reason memory should trade differently from the highest multiple semiconductor in the world. That is the reclassification. That's what moved 19% yesterday. The market is being asked to throw away 40 years of prior pricing history about an entire industry. When the market reclassifies an industry, the second and third order names usually move next. Other memory players, storage names, equipment makers, the ETF that holds all of them. That's exactly what BuzzPulse surfaced overnight on SOXX. Now, I want to spend a minute on something the data is doing this morning that is worth understanding on its own, because it teaches you how to read this kind of report for the rest of your investing life. Here is what the sentiment numbers look like on Micron right now. Engagements in the last 24 hours hit 36.9 million. That's an all-time record for the stock, not a one-year high. The highest reading on Micron in the entire data set. Mentions are up 301% above the daily average. 5,500 unique creators posted about Micron yesterday against a daily average of about 1,400. Sentiment is sitting at 83% positive. Now, here's the lesson, and this is the part to write down. Social engagement is a lagging indicator, not a leading one. People post about a stock after it moves. They don't post about it before. When a name puts up a 36 million engagement day, what you're looking at is not a tell about tomorrow. You're looking at receipts for yesterday. The asymmetric information was in the UBS note, which dropped at 8:52 a.m. Eastern on Tuesday morning. By the time the social data lit up, the move was already in the price. So when you see a finance account on X tomorrow morning posting social engagement on Micron just hit an all-time high, here is what that means for the stock. Now you know what that data actually is. It's a thermometer, not a weather forecast. It tells you the room is hot. It doesn't tell you whether the room is about to get hotter. There's no major macro event on the calendar in the next 7 days. No CPI print, no FOMC, no jobs report. That matters because it means the tape is going to keep being driven by these company level and sector level narratives, with the Iran peace track sitting underneath as a tailwind that gets pulled out from under the whole thing if a single ceasefire headline goes sideways. Before we wrap, one more concept worth carrying with you because it follows directly from what we were just talking about. When a single name in a sector moves the way Micron moved yesterday, the next 2 or 3 trading days usually produce what professionals call a sector rotation echo. Here's the mechanism and how it works. The big institutions, the pension funds, the index trackers, the systematic strategies, they are not allowed to chase one name. Their mandates require diversified exposure. So when the thesis on Micron changes, the buying pressure does not stay on MU. It spreads almost mechanically into the ETFs that hold Micron and into the names that screen as adjacent. SOXX is the obvious one, but the same logic applies to SMH, which is the larger semiconductor ETF, and to specific names like Western Digital, ticker WDC, and SK Hynix, the Korean memory producer that trades over the counter under the ticker HXSCL. Those are the second order plays on a Micron style reclassification. The first order trade was on Tuesday before the open. The second order trades develop over the rest of the week. You'll read coverage about this all year long. Now you know what the underlying mechanism is. The same idea works the other direction, by the way. When a single name in a sector breaks down on a fundamental change, the basket usually drags lower behind it. That's what happened to regional banks in March of 2023 when Silicon Valley Bank went down and the KRE regional banking ETF lost 20% in 2 weeks. Sector ETFs are not just convenient ways to own a basket. They're a transmission belt that turns a single name story into a sector-wide move. Understanding that belt is what most of intermediate sector trading actually is. And here's the part worth knowing. Weeks with an empty macro calendar are not quiet weeks. They are weeks where company level stories and sector rotations get to drive the tape without a Fed minute or a CPI print to overrule them. The Iran peace track is the only piece of macro live on the wire today. Until that resolves one way or the other, every move you see this week is the market voting on individual names and individual sectors. That is when the reclassification stories like Micron get their full run. That is when single stock conviction matters more than macro hedging. Watch it accordingly. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.